Hello and welcome to this brand new episode of Commodity Talk. This is Shivendra Kumar and today I have with me Mr. N.S. Samaswamy, Head of Commodity Desk and CRM at Ventura Securities. Hello sir, great to have you with us. How are you
Hello.
doing?
Hello.
Hi sir, you are audible.
Yeah.
Uh, Sir, how are you doing sir?
Yeah, fantastic. Absolutely fine. The gold is shining, so am I.
Yeah, okay. Great to hear that. Let us start then. Uh, so basically, we'll be talking about gold today, and we know that the yellow metal has been under some consolidation. I just wanted to know that there are certain uncertainties which are behind now. For example, there has been a truce between US and China as far as tariff is concerned. Then there is India Pakistan ceasefire, among other things. So, do you think this consolidation will continue? And if yes, what will be the target for gold in 2025?
Yeah, Shivendra Kumar, actually, on the at the hindsight, if you just see that this has actually prompted a surge in this risk sentiment to be
Okay.
going by the way the truce is between de-escalation between US and China. So that's actually prompted more towards the risk sentiment, and probably it also dented a bit of gold appeal. But that actually it was very short-lived. USD also dollar shot up, and the treasury yield also rose. Thus, the dent in gold appeal temporarily, which we witnessed. In fact, there was. The surprising thing was when Moody's downgraded the US government on the credit rating
So
part of
we will
it.
come to that. So we'll come to that. I just wanted to understand from you uh, that do you see this consolidation to continue? And if yes, then what target should one or the investor prepare for? Sir?
Yeah, we are expecting the consolidation at this stage of maybe $3,300 approximately, which is going on. At best, a bit of correction can happen, and it can consolidate in the range of 3,230. It's actually it's too early to call out as a top for the gold prices, and also
Okay.
it is better cushioned by the central bank demand and ETF retail segment in the first quarter of 2025. So there are enough number of trigger points which can lead other than the coming down on the geopolitical trade front from US and China. So we are
Okay.
finding the consolidation, and for the year 2025, gold should be hovering in the range of 3,440 to 3,570 roughly in dollar terms. So that's it. The strength in gold would continue for the 2025 with enough triggers in the front of other
Okay.
geopolitical concerns.
So it will continue to shine, is what you say. So
Absolutely.
yeah. So I would also like to talk, on behalf of our domestic investors, sir. And we've seen that on MCX prices are down by nearly 4,000 rupees or 4% from their all-time highs. So, in the short term, do you see? As you said, there could be consolidation and some more correction. But what is the downside? That we are expecting in the short or immediate term, as far as gold contracts on MCX are concerned.
See, after having corrected from 3,500 on 22nd April to close to around 5 to 6% at the present levels, I don't see much weakness in the MCX range. Also, in the domestic price level, should be close to 96,500 should be the stiff resistance. In fact,
Okay.
I would say once it were to cross 96,500 in the short term, I'm even expecting a trend that could take it to 97,500. So probably the squeeze or the support can be expected around 93,600 for the short term investor. Weakness per se in gold could set in only below 91,800. So I don't see that
Okay.
going that far, but the support should be anywhere close to 93,600.
Okay. Okay. Uh, and sir, as an asset class, we've seen that gold has been outperforming outstandingly so far this year. And do you think this outperformance over equities will continue through this year?
Absolutely. If you were to see the gold spot versus the Nifty, in 23 it was 13% versus 20% for Nifty. 13% was the gold
Mhm.
rise. In 24, if you compare, gold rose by 27%, gave a returns of 27. Nifty gave a return of 9%. In 25, as far as till this 4 months, 5 months time, what we are observing, there is already a 23% rise in gold, whereas 4% is the rise in Nifty. So this impressive performance should take it along for the second half also, because of the seasonal
Mhm.
pattern in favoring the strength in the second half for gold internationally also. So I find Nifty would be a laggard as compared to gold for the year 2025.
Sir, seasonal, as you, by seasonal, you mean wedding season and the
No,
festival
no,
demand.
no. When I meant seasonal pattern of the gold behavior in the second half of the year, literally, if you flash back and see, unwind and see how the trend has been, gold
Okay.
internationally in the second half always performs very well. So now we are almost done with the 2025 with 4.5 months or 5 months. We have still left with the second half to come. So that would also
Mhm.
be a sentimental support that can add on to that.
Okay. Okay. So the demand for gold has been coming from all quarters, be it mutual funds, retail investments, or central banks for that matter. I wanted to understand the current demand and supply gap, and can you quantify that for our viewers
Yeah,
if there
absolutely.
is a gap?
Yes, we can quantify. First of all, it's not like unlike other commodities where it's more of non-monetary in nature, whereas gold,
Hmm.
you would say it also acts as a non-monetary as well as a monetary in terms of that. So supply is not at all a constraint per se. When you compare at par with all other commodities, gold need not be compared in terms of the supply part. Nevertheless, having asked me this question, I would say when the gold is above ground is close to around 2,16,000 tons, which is proven. And from that, if you were to see the breakup in 2024, there is almost the production is supply is always to the extent of 3,600 to 3,700 tons per annum. And
Okay.
adding to the recycling of gold, which is around 1,400 tons, it takes to 4,600 tons as the demand factor. For 2024, if you were to see, as per the World Gold Council's statistics, 4,606 tons were the demand from 2024 year, whereas the supply
Hmm.
was close to 5,042 tons. In the quarter 25, first quarter 25, Jan, Feb, March of 2025, the demand has been 1,311 tons, whereas the supply has been 1,201 ton. The one very salient feature here we observe is ETF, which in the 2024 year was 7 ton was a reduction, whereas in 2023 it was 244 tons reduction in the ETF. Now in the quarter 25, we are finding first quarter 25, ETF buying is 227 tons. So the basket of 1,311 tons, which is the total demand for the first quarter 25, out of that
Hmm.
227 tons is forming by way of ETF.
So basically, ETF, the demand, the traction for ETF is growing, is what you want to say.
Exactly. Whereas the jewelry demand is on the a little bit on the downside, whereas the investment demand and probably even the central bank is averaging out. I wouldn't say it has really picked up. The central banks for the first quarter is 244 tons, as compared to the
Hmm.
full year of 1,086 tons, which was seen in the 2024. So we are in line with that, but still it is not picking up. It's not picking up so much as what we saw in 2024. What is saliently observed is that it is ETF which is caught up in the first quarter of 2025.
Okay. Sir, coming back to the Moody's rating, we've seen that it has downgraded the sovereign rating for US. So how do you see this development, and what will be the impact on gold and
Immediate
its
needs of
targets, sir?
Yes, yes, yes. Immediate knee-jerk reaction would have been different, but because Moody's came out with what is the reason they came out was on unsustainable debt levels, ballooning
Correct.
interest cost, and political uncertainties. So, and probably if you were to compare the same scenario in 2011, S&P's downgrading when it happened, S&P 500, the equity risk sentiments were, there was a fall of almost close to 10% in the equity markets in the next 2 months of the S&P downgrading. Similar pattern
Hmm.
was observed in the Fitch downgrading in 2023. That time it was a plunge of almost S&P 500 plunged to almost 17% for the next 3 months. So the environment of any rating has proven in the past. Maybe this time it's a different, it's all more of environment is about fiscal erosion, rising yields, and mounting
Correct.
geopolitical scenario. So I find gold could cross the targets with further catalysts other than these downgrading which you are talking of. The other catalyst which will catch up is the inflation data, the economic instability, and probably the Fed interest rate cuts which can come up. And also,
Hmm.
let's not forget the yield is also picking up. So, I mean, this we are maintaining. That's the reason we are maintaining the gold to be at the close to level of $3,570 per ounce in the year 2025. So the rating has not much impacted immediate terms, but yes, other catalysts are going to really support gold.
Basically, a cocktail of triggers is what will
Absolutely,
keep gold
absolutely,
in a bullish trend.
absolutely.
Sir, coming to silver, sir, if we see the gold to silver ratio, it is at an all-time high, which means that silver is underpriced. So, does that make silver a better value buy for investors, according to you?
Yeah, I observe that this ratio, skewed ratio, is so heavily. It's not the first time that has happened.
Mhm.
Today, the GSR, the gold silver ratio of a 30-year average history is showing around number 68. That is the close 30-year average. And now, currently,
Mhm.
we are sitting at around 99. That's the gold silver
Yes.
ratio currently. And during the COVID times, when the ratio went up to 113, over the next year or so, or less than 8 or 9 months, we saw silver shooting up by 73% after gold rally had happened. And then gold rose only by 8%. Similar was the
Mhm.
pattern in the financial crisis in 2008, when the ratio from 53 to 80 had jumped up. Silver rallied almost 81% a year after the momentum gathered in gold. Gold that time rose by only 44%. So a brief moment in 2016, also we witnessed the same pattern where the silver has been outperforming. So I find silver, when the economies are going to shape up well and the global news on the growth path is going to be set up in line, we are going to see the fundamentals play for silver, and silver is going to have a big jump. And I am expecting close to 15 to 20% jump in silver prices once the storm settles. This should go up, and the domestic prices should be anywhere close to around 1,15,000 to 1,20,000.
Okay. Uh, so my final question: what should be the strategy for traders as far as gold and silver is concerned?
The traditional way which people used to bifurcate or diversify their portfolio, I mean, it should be the conventional method of 10 to 15%. In fact, they can increase the proportion to 10 to 15% as an allocation. See,
Okay.
more risk averse investors could probably slightly have a higher average or a higher percentage allocation towards this. Uh, Silver may be more tied to the global economy. So silver is more volatile than gold. So I think gold could
Yes.
be a good diversifier and could be a better proportion. And I think for the retail investors, you have the ETFs which are available in India itself. You have 18 ETFs as compared to the entire globe. We have got 159 ETFs across, and 18 ETFs, which is almost having 61 to 62 tons in the pipeline. So this should probably trigger good as an asset allocation. And also maybe futures entry is also very good. One could go in for futures and option with the hedging platforms, which is available in the derivative segment also.
Okay. So basically, gold is not losing its shine, at least in the near term, is what you say.
Absolutely.
Thank, thank you so much, sir, for your time. It was great having you with us. Have a great day.
Thank you.